You do not want to miss this episode. We're going to bring in a couple of our wealth coaches to join Christina and I, and we're going to share what we learned about infinite banking in the last couple of years, what we love about it, and how you can use it. Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and joining me as always is Christina Wyatt. Christina, how you doing today?
Hey, Darren. I'm doing awesome. Excited to have our crew in the podcast studio today. So
I am
super pumped.
Super excited to bring in a couple wealth coaches today. But before we get started, Christina, why don't you say your piece so we can dig into it?
Yes, let's remind everybody that if you're listening on your favorite podcast platform, please make sure you subscribe and leave that 5-star review. And if you're listening or watching on YouTube, please like, subscribe, and hit that bell button so you always know when new content is coming out. And don't forget to follow us on social media at Control and Compound on Instagram and TikTok.
All right. Well, we're super excited to have Connor Eagleson and Dan Spry in the house today. We'll start with Connor. How you doing?
I'm doing well. Happy to be here and enjoying this beautiful Halifax Harbor view.
Happy to have you here. And Dan Spry. Dan, good morning.
Morning. Happy to be here as well.
All right, so we're gonna dig in, I thought, today, and just kind of what did you learn about infinite banking since you've joined Control and Compound? These guys are some of the best wealth coaches in the country. So let's start with Dan. I'll tell you a little bit about Dan. Dan he used to be a traditional banker, and now Dan, you're an infinite banker, and you love the switch. Dan, the family man. He's the one that coined the phrase that you've probably heard all of us say that we've just, if someone says a good line, we just all steal it. And Dan's line when he came in from the banking side and came into Control and Compound, his line was like, wow, this is like the holy grail of loans. So Dan, tell us about that. Why do you call this, or sorry, what do we all call it now? But why did you coin the phrase, the holy grail of loans? Tell us about your traditional banking loans versus your infinite banking loans. What's the big difference?
For sure. And as much as I'd like to take credit for that too, I would have picked that up from Monty Python way back when I was a kid. So that's probably where that came from. But the big thing, like I say, I was a traditional banker. I spent a lot of time, about 15 years in commercial banking for one of the big banks here in Canada. And spent a lot of time doing, working capital financing, mergers and acquisition financing, that kind of stuff. And the big struggle that we always ran into was around, a lot of these deals made sense, but we had such a hard time being able to structure those payments in a way that actually made sense for the transaction. So the big thing that stood out for me when we started explaining, or when you started explaining this to me and we sort of understood how it worked, was the fact that these loans that you can access against your cash value are completely unstructured. You have 100% control as to what that repayment structure looks like. So it means that you can access that and invest in your business or take advantage of some opportunity, and you don't have to worry about making a loan payment in 29 days. So back in my traditional banking days, if that was something I could have offered the clients, they would have been falling all over themselves to sign that because it's just such a flexible tool.
Yeah, it's incredible when, how, and if is when you repay that loan. And Dan, what about traditional financial planning? Sometimes when things don't go as well and the loan has to be called. Now, is that just in the big down years like 2008, or is that on the table every year?
No, as many of our business owners will know, the banks will look at your financial statements every year for annual reviews and all that kind of thing. And quite frequently, we spent a lot of time having conversations with clients about, your financial statements aren't quite as good as they were last year. Maybe we don't want to give you any more credit, or we don't want to extend that facility for another year. So even in supposedly good economic years like 2018, 2019, we were still in the position where we were telling clients that, all right, we're going to call these loans. We don't think your business can support this anymore. And that's where this becomes such an amazing thing because, you have that ability to decide what that repayment looks like. You can choose to repay that, upfront or monthly or once a year, or you want to wait 3 or 4 years. No problem. You have that control.
Yeah, I mean, as a business owner, when you get a loan called, it tends to be the worst time in your business. It's the worst time. We always say the banks are great; they'll give you money if you don't need it. But when you need it, they're not so good at giving you loans. And when do opportunities come along? To take Christina's phrase, is the opportunity, the deal of a lifetime comes along when one person has money and one person needs money. And typically, when you need money is when all the opportunities are there, and that's when the traditional banks don't want to loan you money. So again, huge advantage for infinite banking. So glad you made the switch, Dan, from a traditional banker to infinite banker. And next we have Connor Eagleson. Connor's down from Ontario. Connor is another amazing wealth coach at Control and Compound. Connor actually started out as a client, and Connor, I remember the day we met at a coffee shop in Ontario, and you thought we were just there to review your policy, but I had a different idea because we were so impressed with you, and just everything about you was like, wow, this is a guy we'd love to have part of the team. So, in part of the policy review, I slid in, now, Connor, why don't you come work for us? And we had a bunch of conversations since then, and you came to work with us. But you have an interesting background, too, in the lending space. You're a real estate investor. You got a couple of real estate properties, but you used to be in the lending business. Tell us a little about your lending background.
Yeah, my lending background a little bit different than Dan's, newer age, if you will. But I worked for a company that did collateralized loans with Bitcoin backing the loan. So a little bit more fluctuation to that compared to what we're talking about here with the cash value and the guarantees we have built in with the policies we're discussing. But yeah, it was a really great experience, but we can talk more about that. But yeah, it was Bitcoin-backed loans.
So you were there when Bitcoin, Bitcoin's obviously a volatile asset. One of the things we talk about, these cash value life insurance policies, guaranteed to go up, can't go down. So what happens when Bitcoin drops? You get an example for us of what Bitcoin was and then what dropped and what happens to those loans?
Yeah, so my role was to help clients basically that for anyone that hasn't fully dove down the Bitcoin rabbit hole, a lot of people bought it, 10 years ago at this point, 5 years ago even, and there's been quite a lot of appreciation since then. So as wealthy individuals know, and as we know from studying them, we want to hold on to those assets that are going to appreciate over time. So they didn't want to realize capital gains, they didn't want to sell and you lose future appreciation. So they would come to our company and look to borrow against the value of that asset. So it's great when the market's steady, which isn't always the case in Bitcoin. So to your question, I think I started, the Bitcoin price was around $50,000 US. Very soon into me joining, there was some events that led to that dropping almost 50%. Which long term, a lot of people that hold Bitcoin, they're not too impacted by that. But in the short term, it can have a big impact when you've got a loan out on that. So the collateral drops by 50%. You have to make a margin call when it drops by about 30%. If it gets down to closer to that 40-50% level, you can get liquidated on that asset. So a lot of reasons people want to avoid that. You have to sell, realize a capital gain from something they might have bought at $1,000 or $2,000. They lose the future appreciation. They're selling at the worst possible time when the market's down. So in terms of those situations, it was always a panic scenario. Never envied clients that I was helping with that. I actually went through it myself, so it was a really great learning experience. But one of the times I remember specifically a client in Australia, so we served clients all across the world. He had a $2 million loan, really didn't want to sell that collateral. Market was dropping. He was frantically trying to repay some of the loan or add more collateral to it to avoid that event. And it's definitely not fun. So that's one of my biggest takeaways since coming on board is these policy loans that we can access. You guys just talked about the when, how, and if, the unstructured repayment. I think a lot of clients can appreciate that, but the non-callable piece, if you haven't been in that scenario, it's definitely not a fun scenario. I wouldn't wish it on anyone. And that's one of the things that's been a big game changer for me, of that peace of mind. You sleep well at night, that you don't have to worry about that loan being called.
I love that story because, Bitcoin couldn't be more different than traditional banking, but yet those stories are almost the exact same. When things are bad, when the market is down, when your financials aren't as good or your Bitcoin price is at the lowest it's been in a while, that's when the loans get called. So it's literally at the worst possible time you no longer have access to the loan, and Infinite Banking solves that, where you always have access to the loan because it's never going to go down. They're never going to ask for financials. That's huge. Now, Connor, you did an interesting thing as a real estate investor. You got a mortgage coming up in the fall, and you had some other purchases to do, and you got a little creative with your Infinite Banking policy. So what did you do to help your pending refinancing?
Yes. So yeah, we have an upcoming mortgage renewal. So I'm working with the mortgage broker right now and, providing all the financials that you need to provide, the property taxes, the job letters, the bank accounts, everything that they're asking for, which, thankfully we don't have to go through that with our policy loans. But to help with some of that and to help with anyone that's been through a mortgage application process, they're looking at your credit score, which again, we don't have to think about that when we're getting these policy loans, which is nice. They're also looking at your debt servicing coverage ratio, right? So they're looking at how much income you have to the debts that you owe each month. And Maggie and I needed to get a new car. We were using a 2009 Toyota Camry, 500,000 kilometers on it. So we were due for a new car in the spring. So we actually used policy loans to purchase the vehicle, finance it through ourselves, because I knew that coming up, a few months later, we were going to be going through this mortgage qualification refinance process. So we wanted to get access to as much as we could to continue our real estate investing. So we kept that loan off of the traditional lending books. So it's not going to show up on the credit score, not going to show up on the debt service ratios as a monthly payment, using our policies to do that. So we like to think of the policies for and opportunities, normally to pick up assets that are going to, be able to pay that for us. But in this case, it was a good opportunity to use the policy to avoid something in terms of a payment and still be able to do those and opportunities in real estate that we want to take advantage of as well.
Yeah, and what I love about the flexibility of that is great. You took a policy loan for the vehicle, you go refinance the mortgage and say you lock it in for another 5 years. Well, now you can go get a traditional loan for your car if you want. You can pay it off. You can do all those things that you could do because you're not locked into that loan. So the loan against your cash value policy is completely flexible, and you can pay that back when you want. I like creative uses of the infinite banking concept. All right, Christina. Now, despite her young appearances, Christina's been in the insurance business for like 100 years or so, or
Give or take.
12 or 15 anyway. Christina, absolutely a rock star wealth coach, and I think one of the top minds in the country when it comes to infinite banking. Christina, what's a big aha moment for you in the last number of years where you're like, wow, I didn't think of that 5 or 10 years ago, and now I look at infinite banking differently?
Yeah, so it's a great question. I love the answers that you guys have given, like those unstructured loans, holy grail. It's amazing, right? What we can use this for. But I think one of my biggest aha moments was looking at the corporate side. So I learned about it, I knew about it, and as an individual, it works amazing, just like what we've talked about. But as an incorporated business owner, it is a whole nother level of what we can be using this for, right? So incorporated business owners, they run into a lot of taxes, right? Lots of taxes, lots of and there's no other product out there like high cash value life insurance that can eliminate some of those taxes for us. So with these policies, we can use them inside of our corporation, still have access to the controls, still use them for these loans that we've talked about today. But we've also got the access for our retirement as well. And we've got that tax-free growth. So really all about the taxes, that learning more and more about how we can use them in our corporation, right? We're growing tax-free. We're not creating passive income inside of our corporation, so we're not impacting our small business tax deduction, right? We're able to use this in our retirement. We've got tax-free strategies for that. And then from an estate value side of things, that capital dividend account and the CDA. So it's just something that's incredible. And I don't think a lot of incorporated business owners know about it, and they're not utilizing it. And I think it should be an aha moment for any business owner out there to take a look at it, especially if you're wanting to invest in your business. There's nothing else like it. Like, it's the only thing we have left as business owners that we can use, right? So definitely would have been the aha moment for me, looking at it from a corporate perspective.
Yeah, I mean, as a business owner or with business owners we talk to, they tend to be sitting on a lot of cash because revenue and expenses go up and down every month. You got to sit on a certain amount of cash, so you're kind of restricted even from investing that money in anything volatile. You're not, if you got 100 or 200 grand of corporate assets that you need sort of as a buffer, you're not going to throw that in the stock market or Bitcoin because it could drop 50%. Now, maybe some long-term money you can look at investing, but your short to medium-term money, like 0 to 4 or 5 years, you're going to need access to that money. So what most people are doing is literally earning zero, or they're putting it in a bank account and paying fees where they're probably losing a bit, or they're putting it in something cashable GIC, paying a very small amount, and then paying 50% tax on that. Versus you can fire this money, that corporate money, tax-efficient corporate money, put it in the policy, grow it for the next 50 years tax-free. But if you need access it next quarter to make payroll, you can access that loan, no questions asked, as opposed to the loans we talked about with Dan and Connor earlier. Is the worst possible time they call it, they can't call it.
Well, yeah, and we're talking about like margin accounts and the investments, but from a business owner's perspective, like you look at, worked with farmers and stuff in the past, and very easily that stuff can get called, right? Like you lose, like if the price of crops go down, that type of thing, they can get their loans called just the same. So you think about volatility from a perspective of investments, but like there's a whole nother volatility in the business world of, you know, the product that you're selling and things like that. So you never want to be put in a position where one bad year can take out your entire business. And when you're working with the typical traditional banks, good move, Dan, moving over with us, that's what you can find yourself in, right? So having yourself set up for success and putting that, you know, putting yourself in control. We talk about it all the time. I think the control is a huge part of the strategy and how we can use it.
Yeah, I absolutely love it for business owners, and there's so many aspects of it, like the death benefit. People don't get super excited about that, I find, in their 30s or 40s, and they get more excited about it down the road. But as a business owner with that capital dividend account, where that money can flow into your company tax-free and flow out to your family or beneficiaries completely tax-free, like it's magic. It's like when we talk to the big accounting firms now, like, you know, we still talk to some bookkeepers that, you know, have offices above their barn or something that, you know, aren't familiar with this concept. But the big firms that we talk to, like they're literally like, this is all we got left. Like this cash value life insurance is one of the greatest things for a business owner. And one of the things about business owners, I always tell them, I go, think if you had 90% of your wealth in one stock, right? You just went to the S&P 500, top 500 companies, and you picked one and you said, I'm going to put 90% of my wealth into that one stock. Now that'd be a pretty risky venture, wouldn't it? Well, no offense to you business owners out there, me included, we're a little more volatile than a stock on the S&P 500. So if you're a small business owner and you have 70, 80, 90% of your wealth tied up into a Canadian small business, that's a pretty risky investment. I love it. I think it's a great investment, but it's a pretty risky investment. So when we start talking about our other corporate assets, the cash we were referring to, you need something rock solid and bulletproof. You want to take risk, you take risk in your business. You want to put cash somewhere that you're going to need to access it. Infinite banking policies or high cash value life insurance policies, I think are a much superior product. All right, so I think one of my biggest takeaways in the last 10 or 15 years is, well, I think the three most important words, you know, it's actually in the name: control and compound. We talked about control, the importance of control, the and asset, and compounding, and the uninterrupted compounding. But earlier in my career, it was the compounding that I thought, you know, this is the most important thing without question. If you can compound without taxes, next to no fees, no volatility, and you don't need to spend it when you need to access your money, you can take a loan and allow your money to compound. I thought compounding was the top thing. And now that I'm a user of infinite banking for so long, and as a business owner, it's actually the control that I like even more now, to the point of what I was saying about business being risky, is knowing with certainty, no questions asked, my cash value will never drop in value, will go up. And when those disasters happen, whether it be in my business, in the real estate market as a whole, in the stock market as a whole, the whole Canadian economy, when we have those corrections, I know my assets in the cash value life insurance will not drop. And when that market correction happens, that's when a deal of a lifetime happens. And I know with certainty I'm going to have access to cash. So being in control, knowing that I can safely put as much money as I can into these into these cash value life insurance policies, knowing I can access it because I'm in control of that money. I was never saving. I save much more now with using the high cash value life insurance policies, because before it was like, I don't want to put this money away in the stock market long term or an RSP, and because who knows what it'll be worth in 2 or 3 or 4 years. So I was hesitant to save. Now, knowing I have access to it, I'm putting all kinds of money in cash value life insurance policies because I'm not giving up control. I'm saving for the long term, but I'm also have it for the short term in full control, guaranteed not to go down. So that was my big moment. How I've shifted through the years. I'm not giving up on compounding. Compounding is amazing, but control to me is actually more important.
No, but the cool part is that you don't need to choose one or the other, right? All of these things that we've talked about today and that we can use these policies for, it's not like, ooh, I have to choose compounding or putting it back into my business or putting it into my next real estate deal. It's the and asset, right? So you can have your compounding and your control, Darren. You can have both. We don't have to give up one for the other. And I think as, going back, I know to the business owner side is that a lot of business owners will give up that retirement plan, because they want to put it back into their business and they don't want to take that time to put the strategy together, give up the cash, but you don't have to. Why would you not do both if you can do both, right? And I think that's, I guess another aha moment is that you don't have to give up one for the other. We can absolutely do both. We can have the control and the compounding. We can have the holy grail loans. We can have the uncallable loans. We can have, the tax efficiencies in our corporation. We can do it all, it's really incredible when you think about it.
Oh, Christina, that was a great sort of wrap up of all the things we talked about. I love what you just said there. Now, before we wrap up here, we got a couple other things I want to go around the table, make sure everyone had a turn to say anything that's on their mind. Connor, anything else you want to add?
Yeah, I was, all this talk's great. I love all the points we went over. I was actually reading the What Would the Rockefellers Do book on the flight out here. And one of the things we kind of overlook, or I've definitely overlooked in the past, is that certainty word, I think. We finish all of our client meetings talking about certainty and what we get with these policies. And back to that story I told earlier and some of these callable loan scenarios we're talking about, I heard on a podcast recently, someone called this their SWAN account. And the SWAN acronym is Sleep Well at Night. I think this could be one that we end up using, similar to Dan's Holy Grail. But it's gone over well with clients because that is, a lot of this uncertainty right now, right? What's happening with interest rates? Are we going into a market, crash? There's going to be a recession. Talk about Bitcoin, right? Lots of fluctuations there. This has really become my SWAN account, my Sleep Well at Night, where I know that, with everything I'm going to be doing in real estate and Bitcoin, these other things, myself taking on risk, like looking for these opportunities, this is the thing that helps me really have that, peace of mind, nice sleep at night. So I've just really resonated with that and that certainty word that I think previously definitely overlooked that and thought, I'll go take all this risk. I don't have to worry about that. It's really nice to have that rock solid base and foundation when, gives me permission to go and do those other things when knowing I have this high cash value insurance as a base.
SWAN account. We will be stealing that line. Thank you, Connor. I'm reminded of March of 2020. I don't know if you guys remember what happened in March of 2020, but a little thing called COVID came along. And I remember getting like panic calls from people going, oh my God, the market was crashing, everything shut down. What's happening to my cash value life insurance? And I'm like, it's going up in value every single day like it has for 150 years. And they're like, oh, I guess I can stop worrying about that and go clean my vegetables. Like, it was like people just assume when things are going poorly, everything's going to go poorly. But this is the exception to that rule, to your point, allows you to sleep well at night. Yeah. Cool. All right, Dan, anything else to add?
Yeah, that point Connor made is a really valid thing and something we talk about all the time because the analogy we always use is the foundation of your house has to be stable, has to be rock solid. Well, the foundation of your financial life has to do the same thing. And that's where these high cash value and infinite banking policies give us that certainty and give us that control ultimately. But what I always reflect on is one of the first conversations you and I had together, Darren, was, a couple of years ago. But I always reflect on when I walked away from that meeting, that first meeting with you and the first conversation we had was about this answers a lot of the questions that I didn't really know I had and didn't know how to ask. And it was like literally like a light bulb went off. And I just understood that this is a solution that most people, really a lot of people can take advantage of and people just don't know about it.
Yeah, I think that's huge. Like one of the lines that we all hear every day when we're meeting with clients is, how come I haven't heard about this before? It's too good to be true. And it's like, it's been around for 150 years. It's absolutely works. There's a million success stories of it, but it's not traditional financial planning where the banks are in control of your money like they want to be in control of your money. So your banks aren't going to be promoting it because they don't want you to have control, Connor or Dan or Christina. They want to be in control of your money. So this is a different approach, and that's why I just think it fits perfectly for people that are business owners, real estate investors, wealthy individuals, and anyone that can kind of think outside the box. Because why follow the herd if the herd is not successful? Let's follow the wealthy people and do what they do. Christina, what about you? Anything to add here before we wrap up?
And I think this has been a great conversation. I appreciate you guys coming on with us today. And I wanted to tell everybody that's listening, we have a community out there on Facebook, Infinite Banking for Real Estate Investors and Business Owners. And Dan and Connor are in there regularly chatting with people. So if you've got questions and you want to reach out, 100% go in, join that Facebook community. We're always in there answering questions. You can chat with Connor, Dan, myself, we're in there chatting. So make sure that you go onto Facebook, add yourself to that community, and we can chat more.
Awesome. All right. Christina Wyatt, Connor Eagleson, Dan Spry. Thanks so much, everyone. Great podcast. Thanks for watching. Thanks for listening. Have a great day. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.